All right, so this is for investors that have three, four, five investment properties in their portfolio. And my question to you is, can you categorically, without question, like factually produce a plan that would demonstrate that you will achieve your financial objective in the timeline that you have anticipated with the acquisition of those properties? And my assumption would be that if you're listening to this and you're watching this, then you do not have a plan that would be able to clearly define the expenses, the profit, the growth, all of these elements that should be able to give you the confidence that you're going to hit your financial objective. So why am I bringing this to your attention? Because in this current market of interest rates are rising, inflation's coming, then you're going to find yourself in quite the pickle and conundrum of not sure what to do in respects to the assets that you hold, because it's quite clear that if you were to actually work that out, that you would be in a position where you are going to fall short in your income target goals. Because when you made those investments, when you made those decisions, the assumptions that you made at that time was factoring in interest rates at 2, 3, 4% at best. But now with interest rates moving back up to where they're probably going to stay for a long time now, back where they should be in that 4, 5, 6, 7% territory, then the income that's being produced from your assets would quite possibly now be negative geared if you've purchased in the last sort of 3, 4, 5, 10 years specifically. So now you're having to take money out of your pocket to put into your portfolio to continue to generate income. How sustainable is that going to be for you if you're going to have to continue to prop up your portfolio? Something to really think and consider about. Potentially, what you may have to do is thinking about selling off some of those assets to repurpose the capital from that to put that back into better income producing assets, therefore increasing your serviceability. So potentially it's time to rethink the approach and the strategy that you've implemented based off that old data, that old information that you had, because now we're moving into a new territory and we're never going to go back to where we were. Like, let's face it, people, let's get serious about your investing. It's time to do an audit to understand, are you on track or are you off track to hit your financial objectives?